What's up, everybody, and welcome to Heresy Financial. This is the show where we discuss financial topics and education in a way that's considered heresy to the financial establishment. Today, we're going to be discussing the 3 ways that you can buy gold. There are many ways to buy gold out there. We're going to be talking about the top 3, and then we'll discuss the pros and the cons of each way that you can actually buy gold. Let's dive in. All right, guys, there are 3 ways that are the safest and the best ways to buy gold, and so we're going to dive into those today. Those 3 ways to buy gold are number 1, physical possession. You actually purchase physical gold coins or gold bars, and you keep them in your own possession. The second way that you can buy gold is through a mutual fund or an ETF, and this would be done through a brokerage account or an IRA. And then the third way to buy gold is to hold it in a service where they store it in a vault for you. So we're going to dive into each one of those, discuss the pros and cons of each, and then come out with a winner on top. So the first way to buy gold is to buy it physically and hold it in your own possession. Right here, I've got an American, a silver American Eagle. This is not gold. I don't know if you can see it here. But the process is the exact same for buying one of these as it is for one of these made out of gold, a gold American Eagle. Now, what you would do is you'd find a gold dealer near you. You can go onto the U.S. Mint's website. I believe it's usmint.gov. And you can go onto their website and look up a catalog of authorized dealers that are authorized to purchase directly from the U.S. Mint. And you can purchase you can go to these locations and you can purchase your gold directly from them. Most of them will take any form of payment except for something like personal checks, which would take time to clear, or electronic transfers from something like bill pay, which also would take time to clear. So they'll take things like cashier's checks. A lot of times they'll take cash. Sometimes they'll even take credit cards and debit cards, and they'll take wire transfers as well most of the time. And so you can walk in. Sometimes you'll want to call ahead to set an appointment depending on how much gold you plan to buy, and sit down, and they'll take an order from you, and then they'll go back into the vault, and then they'll get your gold, and they'll take the payment, and the transaction will be completed. Usually they will charge a little bit over the spot price. The spot price is the market price. If you look online for the actual price of gold or silver, and you take a look, and today it closed somewhere around $1,500 an ounce for gold and $18 an ounce for silver, somewhere in there. They'll charge a little bit of a premium just for the cost of they had to store that gold or silver themselves while they waited, and then they also had to pay for the shipping for the transportation from the U.S. Mint to their location. And so because of that, and they have to make money as well, otherwise they wouldn't be in business in order to be able to do that. So they charge a little bit of a premium over spot in order to be able to provide this service. So it's a little bit more if you're buying something like a silver coin, an American Eagle like this. Usually it's about $2 or $3 per coin. If you're buying something like a gold coin, it's going to be somewhere around $20 to $30 for the markup. Some locations are even more than that. Now, what you get in return for that higher price is that you actually get to hold this in your physical possession. So you don't have to rely on anybody else to store it for you. You don't have to be worried about that vault getting broken into, that vault getting seized. You don't have to worry about any dishonesty with the company that you're trusting. Something like a physical safety deposit box, you would be worried about maybe violating the bank's terms and conditions with what you're allowed to store in the safety deposit box, or the fact that they're subject to search and seizure, and the fact that in the case of a big crisis, which is why you'd be buying gold and silver anyway, the bank might close and you might not actually have access to get into your safety deposit box. So the advantage to having physical gold or silver is that you actually have the physical gold or silver in your possession, and as long as you hide it well, the only thing you have to worry about is a thief breaking into your home specifically and knowing exactly where you store your gold and silver. If you put it in something like a safe, that is not bolted down or easily accessible or easily carried or moved, then that might not be the smartest option, because a thief will probably choose to walk away with the safe before they walk away with any of your other valuables, knowing that that's likely where you have them stored. And so as long as you have them hidden well and you haven't told anybody where they are, something like a physical coin, silver or gold, is a great way to store wealth. And you're not subject to any storage fees yourself. You're not subject to any annual fees or percentage fees on holding that gold. It's just when you make that initial purchase. Now, it's extremely liquid anywhere in the world. You can always sell gold or silver to gold or silver dealers. It's the most liquid asset in the world, always has been. And so you can always take it if you need and turn it into any currency that you need. And so if we do have a collapse in the US dollar, you can then take your gold and or silver and trade it in for any amount you want of the new currency, depending on what the value of that new currency is. Because most of the time, historically, when a currency collapses, it's replaced with a new currency. So if all you have is the dollar and it collapses and the government issues a new currency, your gold or silver, you'll be able to preserve your purchasing power, because you can then go purchase new currency with that gold or silver. There are also companies you can buy gold or silver from that you can have them ship it to you. Now just do your research and make sure you're buying from a reputable company that's trustworthy. You don't want to send a wire transfer somewhere that's not actually going to be sending you gold, but usually they'll send it insured and registered in the mail to you in an unmarked box, and so you don't have to be worried about somebody stealing it in the mail, other than by chance, in which case it is still insured. So there are a couple ways to buy this physical gold and or silver, and you'll pay a little bit more for it when you actually make the purchase, but then it's yours scot-free. You can hold on to it, hide it, and store it however you wish, and then you don't have to worry about any ongoing costs associated with that. And the only risk is that it gets stolen from you. There's no counterparty risk. You don't have to worry about somebody being dishonest about the fact that they're actually holding on to your gold. That brings us to the second way that you can actually buy gold and silver, and that's to do it through a mutual fund or an ETF, through your brokerage account or your IRA. Now, again, you'll want to do some very in-depth research on which ETF or mutual fund you choose in order to do this, because there are huge counterparty risks with purchasing gold and silver through an ETF or a mutual fund. Now, a counterparty risk is something, it just means that you are at risk of the other part of the agreement, the other person on the other side of the agreement, not honoring or not being truthful about honoring that contract. So when you purchase a gold mutual fund or a gold ETF, usually they'll be holding a certain amount of gold or a certain amount of silver underneath their name in order to be able to accurately replicate the value and track the value of the gold and silver movement. The problem is there are a lot of mutual funds and ETFs out there that track the value by trading futures on gold and silver, or they hold their own gold and silver in unallocated vaults by unallocated bank bullion precious metal dealers that are also loaning out that same gold or silver to other parties. And so if a crisis comes along where people are rushing into gold and silver, we are likely to see many companies that think that they actually own gold by proxy through these services. There is not enough gold to go around. The conservative estimate right now is that there are about 20-to-1 paper claims on gold than there is actual gold to back it up. And that's just due to the fact that this the vaults and the companies that own the gold lease it out in an unallocated manner to multiple parties, just hoping that multiple parties do not all call asking for delivery or claiming their stake all at the same time. And so if something like this does happen, where we have a crisis in confidence in currencies and there is a flight into monetary gold and silver, we are likely to see a collapse in many of these companies, including mutual funds and ETFs, that get their value from this exact same method. And so you'll want to do your research to make sure that the mutual fund or the ETF that you're invested in doesn't derive their value in this way, that they actually physically own the gold and or silver themselves. And if they don't, that it's allocated, segregated, and insured underneath their name. Now, keep in mind, you do not actually hold any ownership in the precious metal yourself if you do it through a mutual fund or an ETF. All you have is a piece of the pie where your value of your investment in that mutual fund or ETF will fluctuate based on the going price of gold or silver. But you do not hold any rights to actually claim ownership of a precious metal yourself or take delivery of it. So keep that in mind, that that's not technically ownership of the precious metal itself. You're just owning something that will likely track, as long as you choose one, that will likely track the value of gold or silver. Now, silver, it's a little bit safer to do it through a mutual fund or an ETF than gold, because there are not near as many claims on silver as there are gold. When you look at the futures and the way that it's traded in the world, there's a lot more silver than the actual futures markets and other industries around silver are built. The problem is primarily isolated in gold itself. And so if you're going to be choosing a mutual fund or an ETF for silver, you're likely to not run into a lot of the counterparty risks that might be in the multiple levels of derivatives that you have with gold. So that is the second way to buy gold and or silver, through an ETF or a mutual fund. Just make sure you're doing your research and buying one that is not subject to this. Now, a subcategory under mutual funds or ETFs for gold and silver is to purchase mining stocks, because you can purchase the stocks of gold and silver mining companies. And when gold and silver start to do really well and they continue to rise as other currencies start to collapse, you'll see that these companies will start to do really well because their profit margin increases a lot. And so some of these small mining companies will probably start to get purchased by some of the bigger mining companies, and a lot more money will start to flow into them. And so you'll see their share prices increase. But the problem is there's a lack of transparency in the industry, and there's a high level of expertise necessary to be able to determine whether these companies are actually quality companies or not. And so most people will choose to invest in a mutual fund or an ETF that invests in these gold or silver mining companies instead of trying to pick them out themselves, because you're going along with your daily life routine. You're not the one out on the field actually visiting these miners and seeing if they're reputable and seeing if they have good mining operations actually taking place. And so what you'll find is you can purchase mutual funds or ETFs that invest in these mining companies. Again, do your research, read the prospectuses, make sure that these are quality companies that are reputable, and investing in companies that have a high likelihood of doing well in the case of a currency collapse, a crisis of confidence in currencies where there's a flight to monetary gold and silver. That brings us to the third way that you can invest in gold and silver, and that is through a storage company. So you can actually purchase yourself, and the average person, you don't have to be an institution or a bank or a large corporation. You yourself can invest in gold and silver and have it stored in a vault for you. Now, there are expensive ways to do this, and there are cheaper ways to do this. There are convenient ways to do this and less convenient ways to do this. But there are a lot of ways to do this that you can go and research online. There are two companies that I have tried out myself for this. One of them offers gold or silver or other commodities and metals. One of them offers just gold. The two companies are called goldmoney.com. That's the first one. The second one is glintpay.com, and I'll link both of them in the description below. I didn't have a great experience with goldmoney.com. Partly because of the increased regulations that America has right now. It is much harder to do something like this in America than it is in other countries, because what the goal is to offer you a debit card on your holding of gold and silver, so that when you want, you can just kind of treat it like a savings account. You can own gold or silver in your account, and then when you want to spend that money, you can just have it transferred into dollars and then spend your debit card. Well, goldmoney.com wasn't actually able to get all the way there, and so you can still hold your gold and silver there, and it's a relatively small fee whenever you make a transaction. It's a lot smaller than actually purchasing a physical coin yourself. But there are usually small storage fees associated with that as well. And as long as you choose the right company, the gold and silver is going to be insured. It's going to be allocated and segregated, meaning that it's actually specifically set apart underneath your name, so they're not able to loan it out or use it for different people and make multiple people have claim to the same piece of gold. GlintPay.com, they have an app, it's called Glint for iPhone and Android, Glint, Glint, and they did successfully push through getting a debit card on it, but you can only do it with gold, not silver. My experience with Glint was a lot better. It was still rocky, but the user interface and the user experience was better than goldmoney.com. But again, you can't do silver, you can only do gold. Again, it's insured, it's segregated, it's allocated, and they'll send you a debit card so that when you want to spend it, you can just transfer it back into cash and then use your debit card. Again, there are newer companies with a newer model of doing business, other than some of the other companies that just store the gold for you for a fee without the debit card. And so because they're newer companies and because they're dealing with regulations across multiple countries, you're going to have hiccups. And so I'm currently still testing it out, and I don't have a full review on it yet, but it was the better experience of the two. And as time goes on, especially as cryptocurrencies take off, you're likely to see other companies like this emerge, especially as people start to lose faith in fiat currencies. And so pioneering companies like this will probably iron out their kinks as competition increases in the field. But those are the three ways to buy gold. The first one was to buy physical gold from a local gold dealer or from an online dealer. They'll charge a higher markup, but then there's no storage fees and no counterparty risk. The second way to do it is the cheapest way, is just to do it through a mutual fund or an ETF. There's not going to be that high markup on the purchase price, but you have huge counterparty risk if you haven't done your research, or even if you have and there's something that's dishonest or a lack of transparency. And so you have the counterparty risk, but it's cheaper. And then the third way to do it is to do it through a storage service. There's going to be an annual fee or a percentage fee associated with that. And then some of them will offer debit cards to make it easy to actually access that gold as far as purchasing power goes. Those are the three ways to buy gold and silver. And the bottom line is make sure you're doing your research. And the one thing to watch out for when purchasing gold or silver from a local dealer is to never, ever, ever buy collector's coins, also called numismatic coins. Unless you are a highly educated collector already, you are more than likely to get taken advantage of. You are going to pay way more in a coin. If this was a collector's coin, it weighs 1 ounce. There would only be about a half an ounce of silver in this. And you're going to pay more for a collector's coin per ounce than you will for just straight gold or silver. And so the reason that the dealers are going to push this on you is because they pocket the difference. They make a huge percentage when they sell collector's coins to you. And so they try and push it, especially to somebody who looks like they don't know what they're doing. And so when you walk in, make sure you're buying gold or silver bullion only. American Eagles are a great way to do it, whether it's a silver American Eagle or a gold American Eagle, because they're minted by the US government. They're very easy to tell whether they're legit or not. They're very liquid, and they are not subject to taxes, capital gains, like some other forms of gold are, like bars. And so if you're going to be buying gold or silver physically, make sure that you are buying American Eagles. that's my preference, at least just buying bullion, which it would be in like a bar form of gold or silver, and do not buy collector's coins because you're going to get screwed over and you're going to pay a lot more and you're not going to be able to liquidate it because they are not liquid. There's not a huge market for collector's coins. So those are the 3 ways to buy gold. I hope you enjoyed it. Please leave any questions or comments in the comments section below. And if you haven't already, please hit that subscribe button and the like button. And thank you so much for watching. You guys have a great day.